and welcome to Capital Market Live on Channels Television. I'm Will Ibang. First things first, let's check in on the markets and see how your stocks performed for the week. We begin with Europe, where the stock markets closed lower on Friday as investors took stock of a week of central bank rate hikes and the latest news from the banking sector. The UK's FTSE 100 tumbled over 1.2% to settle at 7,405 points. France's CAC 40 also recorded triple-digit losses, while the German DAX was down 1.66%. Global markets have been digesting the latest comments from the U.S. Treasury Secretary Janet Yellen, who says emergency actions used to back up Silicon Valley Bank and Signature Bank customers could be deployed again amid concerns over U.S. regional banks. Now, in Asia, markets were mixed on Friday as investors weigh remarks from U.S. Treasury Secretary Janet Yellen. The Hang Seng Tech Index, led losses in the region, trading 0.67% lower, but the Hang Seng Tech Index was up 0.61%. In mainland China, the Shanghai Composite closed 0.64% at 3,265.65 points, but the Shenzhen component was up 0.25%. While in Japan, we saw the Nikkei 225 down 0.13% to close at 27,385 points. Now we'll move up to the U.S., where stocks rose on Friday after a volatile trading session. Although Friday began with fears that a banking crisis was spilling over to Deutsche Bank, the markets rebounded to end the week on a higher note. The Dow Jones Industrial Average gained 0.41%, closing at 32,237 points. The S&P 500 rose 0.56%, while the Nasdaq Composite ticked up 0.3%. The major indexes all had a winning week, with the Dow gaining 0.4% week to date, while the S&P 500 and Nasdaq gained 1.4% and 1.6% each. Now to the domestic equities markets, which closed the week in the red zone. The NGX all-share index market cap declined by 0.04%. The week recorded 3 sessions of negative closes against 2 days of gains. However, activity levels were mixed as trading volumes increased by 97.8% week on week, while value traded declined by 6.5%. Also, sector performances were mixed as the consumer goods, industrial goods, and insurance indexes declined, while the banking index advanced. The oil and gas index, however, closed flat. Now, from the insurance sector, Sunu Assurances emerged top performer for the week, followed by Lasako Assurance, while NCL Nigeria crashed this week, leading the underperformers. Name it top trades for the week, followed by Transnational Corporation and UBA, contributing 73.89% and 21.21% to the total equity volume and value traded in the week. Now, as the world marks the Global Money Week, an annual global celebration initiated by Child and Youth Finance International, CYFI, aimed at inspiring children and youths to learn about money. Back here in Nigeria, it's been a week of activities geared at raising awareness by engaging children and youth. And the CBN says there is need to extend financial literacy to children to enable them plan for the future. Abubakar Albasu is the head of advocacy consumer protection at the Central Bank. He was a guest on our Business Morning program this week.
We engage them using what they like most, using fun activities, using social media that keeps them busy. And so if you look at this year's Global Money Week, a lot of activities took place that are really exciting. And it's no more that system of just putting students in classrooms and teaching them, that boring stuff. But then a lot of activities take place. The CBN is on social media, and our collaborators all over also on social media. So we take advantage of the times, using social media to reach out to the children and young persons. It has been developed. It's been infused into career subjects. We've been working with a lot of stakeholders, with the Federal Ministry of Education and the Nigerian Educational Research and Development Council leading this project. And very soon now, once we are done, the students in schools, at least from primary 1 to SS3, will have a feel. They will be learning about financial education without even knowing, because they are not standalone. It's not a standalone curriculum. It's been infused into career subjects. Some of them compulsory career subjects like English language, for instance. There's financial literacy going forward. So what we did not really benefit when we were students, our children and younger ones will actually get.
Now also we've seen the cash crunch in the country, and the central bank says it has commenced the evacuation of Naira notes to commercial banks across the country. Perhaps this will bring the expected ease in the supply of cash across the country. Meanwhile, before this update from the CBN, our visit to some commercial banks in the nation's capital, Abuja, showed that the situation where most residents spend 5 to 8 hours to access cash over the counter and at some ATM points has not reduced.
You don't hear?
It's over 3 months since the Naira redesign policy took effect, and the negative impact on most Nigerians continues to affect their businesses and livelihoods. Long queues at entrances of commercial banks in the nation's federal capital and across Nigeria are now common sights. The complaints are not abating, and the customers spend long hours to get cash.
If the government wants to pay us the old note, they should go ahead. Because I see no reason why they say they want to pay the old note to reduce the stress. And instead of them reducing the stress, they are adding more stress to us. Election has finished. So for them to still withhold the money and keep on coming here every day is wrong.
Only recently, the central bank aligned itself with the ruling of the Supreme Court to extend the use of the old Naira notes till December the 31st this year. This alignment has not eased accessibility to cash. Bank customers are even complaining of poor internet connectivity and no cash in the ATM points.
You spend 5 hours trying to collect money from the cash point card. Don't you know that you've lost a lot of productivity? Time is money. And I cannot imagine legislators, people in the executive, watching their citizens like this. You know what? It's a vote of no confidence. There shouldn't be an election.
I came to withdraw money because I don't have cash. And we have been coming here since on Monday till now. I've not been able to get cash. And I need this cash because I don't have a car. I don't own a car. So I need this cash to do some things so that I can go to work.
This situation pervades in most cities across the northern states. The situation remains the same, with residents expressing concerns of lack of access to cash.
There's a transaction I did for almost a month, and up till date, I've not gotten a reversal. How can you be able to access the bank? When you call the customer care online, they will keep you online for hours. Exhaust your credit, you get credit, they will tell you our customers are busy and you can't access the bank. So as I'm telling you, there's a failed transaction I have that has lingered for a month. And
the Nigeria Labour Congress has threatened to mobilize its members across the country to protest the cash crunch in all central bank branches from Monday next week. Today, however, the central bank says it has evacuated Naira notes to commercial banks, urging them to work through the weekend to ensure effective circulation of cash. Hopefully, that protest will not happen. Now let's get down to reviewing activities in the market and some key events that caught our attention this week. I have in the studio Mr. Ambrose Omodion, the Chief Research Officer, Invest Data Consulting. It's good to have you on the program again.
Thanks for having me.
Mr. Ambrose, the elections have come and gone. Corporate earnings are still trickling in. What would you say is investors are looking to do right now, because the market is not looking friendly?
Actually, I would say that I call it a tension between rates and yield. It's what pressing the equity market as we speak now. After the adjustment of rate by the committee on Tuesday. And also, that once you adjust rate, yield in the physical market will start looking attractive. And also, don't forget that the bond last week, we saw the rate of almost 16.5 yield in bond. But because also inflation is about 21.91, investors are trying to balance, where should I go? Should I still keep my hope on this earnings expected? Because I tell you, out of almost 120 listed equity, about just 15 have released their audited account for 2022. That means more numbers, we know markets are waiting to hit the market. But the thing is that now, what is the yield of those that are hit the market and what the yield of what's expected? That's why I said the tension now is between yield and rate. But the good thing is that the election has come and gone. On the part for me, investors should just sit down. For those that are looking for dividend income, invest on this company, especially as all eyes are on the world, on the first-year banks that are yet to release their number. That will also shape the market. But don't forget that in equity investment, sentiment is very, very powerful when you are taking position. Now that we're seeing sentiment slowing down because of what? Because of delay result from what? From the first-year banks and other banking the second tier. That is what is shaping the market. But once we start seeing that financial result from the banking side from next week, and being the last week for especially we call it the official deadline to submit your result, we expect that next week we'll see more results hitting the market. That will shape the market again. But as we speak now, that rate and yield is what is influencing the market as we speak.
Well, technically, we saw the market is just a bit dicey. We did see the market cap or the all-share index hitting, almost hitting 56K level. Yeah. At some point, we're actually counting down. I was counting down to it, but it didn't get there. It didn't hit the mark. But we saw pullback because of profit taking from investors. Yeah. Traders are, looking to cash in there. What should traders be doing now? Because it seems like we don't even know what direction to go. Because after elections, the market seems to just trend downward. The profit taking, as
you mentioned, is still ongoing.
Yes.
And also, market is side trending as we speak. And when market is side trending or consolidating, the traders don't benefit from the market. Even the stockbroking firms don't benefit from the market until the market is making an uptrend or a pullback before you know what to do. Now the market is on the side trend movement. Every trader is waiting. And for personally like me, I'm waiting the market to pull back. I'm not expecting the market to go up now because I'm not taking position. Traders will expect the market to pull back, while investors are busy mopping up dividend-paying stock for what? For dividend. Why traders are positioned, this market correct, let's jump into the market. And that's the beauty of the market. Also, if you look at the market breadth so far, you can see that we are seeing more sellers in the market than buyers. And why? Because markets have rallied from the month of November to almost before the elections started. And now that election is gradually shifting away from attention from investors, all eyes on how can I invest for dividend? And as I mentioned that what is influencing the market up and down is that rate and yield. Once we're able to get it right and see that, inflation has made equity market more attractive compared to fixed income, because in equity market, you can make 10% in your yield from dividend, an additional 10% of that will give about 25-30%. That is above inflation. But all the fixed income yield cannot give you above inflation. That means for designing investor, they want to take position in stock that have that 10%, 9%, 11% yield, so that when they make capital acquisition of 10%, 20%, they're already ahead of inflation. Because if you are waiting for the next 364 days for a yield of 9% in a treasury bill or in the bond market, you're going to wait for 364 days.
So be more clear, Ambrose, here. So what should investors do? How should they balance their portfolios? If you're saying they shouldn't wait 365 days for a fixed income yield, what would you suggest? How do they balance their portfolios?
No, actually, I told you that we have not seen the banking stock. And most of these banking has between 8 to 11, in terms of yield. That means they are attractive now. And naturally, even when a stock pull back, the yield will go up. And if the company or the bank maintain what they paid the previous year, that means you're even getting a better yield because prices are pulling back. That means the way to go now is the banking stock we are not seeing there, especially the first-year bank, the life of GTB, Zenith Bank, UBA, Access Bank, Fidelity. These are second tier. But I tell you that this banking stock, as I speak, or less, on what is happening on the global scene. Then when they send their result to CBN, but I believe that if a company has done well, CBN will also look at the edge you're done well. They can't control your payout. Before now, we know that there are some banks that when they submit the results, CBN says you can't pay this. You have to bring it down either for one reason or the other. But CBN has come out in the last minute that our banks are healthy. That means our banks have good capital adequacy. They have good cash ratio, liquidity ratio. We have also earnings are becoming better in the banking sector. For me, there's no cause for fear for any investor. But it is now done on most of all that are invested in the market. As CBN is regulating the bank, also you, the investor, also should have a way of also seeing what is happening in your bank.
Thank you so much, Ambrose. It's quite interesting what's happening in the market, and we'll see how that plays out, especially with investors still digesting the 50 basis point rate hike by the central bank. Exactly. And looking at other macro macroeconomic factors that probably shape, their investments this coming year. We look at earnings. I think there's been a mixed bag for earnings, especially with dividend declarations. It has not been, sitting well with some investors. I can say, not happy with what they're seeing, but we'll see how the market plays out. So thank you so much, Mr. Ambrose Omodian, Chief Research Officer, Invest Data, for coming on the program and sharing your thoughts with us. We'll pick up some other time and see how investors can really make a lot of returns from the markets going forward. Yeah. Thank you so much.
Yeah, thanks.
And after the break, we'll look at other markets, other key events that took, shape the capital market space this week. That in a moment. Do stay with us. This is Capital Market. Don't go away. Welcome back. If you've just joined us, you're watching Capital Market Live on Channels Television, and we've been reviewing our key activities that took place during the week. And I have, in the second segment, Mr. Mukhtar Mohammed is the CEO, Finance with Mukhtar, joining me to share other perspectives on what's been happening in Nigeria and the global space as well. I mean, thank you so much for joining us.
My pleasure.
So it's been an unnerving week, especially for in Europe and in the US, especially for the banking industry. We've seen several banks. We've seen Silicon Valley Bank. We've seen Signature Bank. Credit Suisse joined. And now Deutsche Bank, has joined the list of banks, with the credit crunch problem. What's next? What do we dare say will happen next? Will that filter into Africa? Are we protected here in Nigeria? What should we expect from this?
I think what's happening is what we call the market is in a panic mood, and so people react, not respond to the market when the market is in a panic mood. But when we talk about Africa, we have nothing to worry about as it stands now. If you look at Signature Bank, is a one-shop bank. It operates for cryptocurrency traders. And that space has been going through its own challenges. So there's nothing that will immune the bank that is the funding of crypto to be immune from that. When you look at Silicon Valley Bank, it also was created specifically for the tech company and for startups. And the tech companies and the startups had their own challenges. And so it filtered back to the bank. Now, with Silicon Valley Bank, it's even funny that the government just decided to step in immediately because of the snowball effect it may have in the mortgage sector, because they were in turn trying to sell off their asset after selling off some of their bonds, long government bonds that were supposed to hold for 10 years. But when those startups needed their money because of the challenges, some of them needed to pay off some of their staff, they were retrenched. So that caused the challenge. So they need to go and sell their bond. And at that time, the value of the bond, because of the hiking interest rate, came down. And so they had that challenge. Now, remember that challenge was just within that space of those tech companies and the startup. Now, where Africa should have been scared of, if you had Morgan Stanley or you have Bank of America, we must know that Silicon Bank is the 15th largest bank in America. So normally, because of the special nature, we don't have so much startup here in Nigeria yet. Most Nigerian startups just tend to get money through funding from other means. So we don't have a startup bank, or they partner one bank towards doing startups. So that immune Nigeria and Africa from it. So the challenge is, but we need to get ourselves prepared in case there's a effect. When I say the market will panic. And now you saw that happen to Credit Suisse in Swiss before you know that it came now to Deutsche Bank.
But what lessons would you say stakeholders in the banking industry should learn from what has happened now?
I think diversification is the key. You must diversify, and that's why the Nigerian banks are fine, because we are not just a one-shop bank. Now the banks are formed holding companies. Those holding companies are involved in other things, real estate, payment system. Some of them are acquiring assets outside the shop, Nigeria. So some of them are into a lot of, it's not like a one-shop bank now. It's not a one-shop bank now. It's a diversified portfolio. So that also will help the Nigerian bank. And then in terms of liquidity, we must give it to the CBN. They've been able to keep that liquidity ratio even when everything was stable, they make sure they make liquidity ratio of 35%, which is fantastic. So that means most Nigerian banks are liquid. Even if you follow the trend last week, they said most Nigerian banks are not even patronizing the CBN windows again for liquidity. So that shows that in terms of liquid, Nigerian banks are very liquid. Okay. Now, what happened to Silicon Valley Bank is that they were not as liquid in terms of cash. They invested in other instruments that they needed to cash out, and they were cashing out at not at a good time. So
that is something, well, a lesson learned, and we see that Nigeria, thankfully, and other African countries, we have not, at risk of a contagion at the moment. No. But speaking of diversification, you mentioned that earlier that, banks, should diversify their, portfolios or their investments to not be, mono. Trading in a mono market. We see Access Bank Zambia, the subsidiary of Access Holdings, one of the holding companies, getting the approval of the Central Bank of Zambia to merge with the African Banking Corporation. Now, that's good news for the Access Holding Company, but how is that good news for investors? Can you tell us how investors in Nigeria can benefit from that development?
I think the real thing is that
if that happens, it's said to be one of the top five banks in Zambia. If that merger, that transaction happens.
Well, you need to look at Access Bank. What are they trying to do first? They say they want to be one of the first three largest banks in Africa. So this is not the first acquisition they are doing. They have acquisition in Kenya, in Zambia. I think they've done also in South Africa. They've done in Botswana. So they are expanding because they want to become an African bank, not just a Nigerian bank. And again, now they have the holding bank structure. So it's meant for investors to take opportunity of that. But again, you must be cautious, because when you're acquiring a bank like that, you don't see the dividend immediately coming in. If you look at Access Bank subsidiary outside the shore of Nigeria, their contribution to the Access Bank group is I think it's about 20%. So they're saying they want to move it to 50 or 70%. So Nigerian subsidiary is still the highest contributor of revenue, income to Access Bank. So what we'll see in the short time, you won't see those numbers telling up and investors gain in. Now, Access Bank now becomes a long-time stock for investors. And at the moment, it's selling at a very cheap. When you look at the PR ratio, you look at the dividend yield and everything, it's selling well. But
I also did see that their share price did depreciate by, I think they lost about 5 kobo on Friday, so to close at 8.65 kobo. So they didn't really do well as I expected following the news.
No, the news came after the market. And again, like I said, most of those news, you don't see the impact on the bottom line of Access Bank anytime soon. Okay. So investors are learning from what they've seen of previous acquisition. We've not begin to see those numbers roll into Access Bank and said, okay, fine, they are subsidiary in Africa. It's comparable to a bank like UBA. We are beginning to see the numbers from their offshore begin to come into UBA, and you see the bank is going in terms of paying dividend to investors and others. So investors are looking, but for Access, it has just been acquisition. So they are looking at their long-term strategy. So they said in 5 years' time. So we've seen 2 or 3 years of those 5 years. So expectantly, any investor that is looking at Access Bank should be looking at it for the long term, not for the immediate term.
So with this acquisition now and our Access Bank expanding in Africa, Africa, we have the AfCFTA, and we are looking to trade amongst ourselves. Would Access Bank be a bank to position itself to aid, boost AfCFTA, and also the PAP system that we are trying to promote here to enable investors trade, between countries without having to be in that country or be a resident of that country to be able to buy shares? Do you see Access Holdings enabling this?
I think so. But again, the African Continental Trade Agreement has not started fully like everybody expected. Africans are still not doing business within themselves like what they do with European or Asian countries. So definitely, it's a strategy that Access Bank have said that they are trying to capitalize on. But as it stands now, that has not fully take off because of the challenge in terms of payment system. And that's what they are also working on. And then remember that the African Continental Trade Agreement is saying those products must be produced in your country for you to take it to other African countries. Then you have this tax incentive, and then that will make it cheaper comparable to other Africa, to what you get in Europe. That has not come to play yet. So they still trying to, but I think what Access is trying to capitalize at the moment, they are trying to capitalize at the payment side. You are trying to build a strong, robust payment system whereby you can use Access in any part of the world, and especially in Africa, and make payment. That is where they are driving in most of the acquisition, in trying to synergize other markets with the banks there. So that's what they are trying to do now. That's their first priority first, before once the African Continental Trade Agreement kicks up and keep up, I'm sure they are going to take part in it.
That's a very wonderful and interesting development to look forward to. I'll definitely look forward to that, and we'll see how that plays out in Africa and helps Africa trade, amongst themselves. Thank you so much, Mr. Mukhtar Mohammed, Chief Executive Officer, Finance with Mukhtar, for joining us on the program and sharing your perspective on the program.
My pleasure, always.
And that's it on Capital Markets. Do join us same time next week. Don't forget, you can watch this again on our channel's television page on YouTube. Also follow us on our other social media platforms to get updates. And Will Ibang is bye-bye for now.